Tesla stock got news today, which I think is kind of bullish, but it is dropping the stock about 2% here today. The markets are in the red all across the board, slightly in the red at some points today. It's going to be very volatile, especially closing out the rest of the trading day, because you had bank earnings, you had Michigan Consumer Sentiment Survey, in which we're going to talk about all of those things. But the S&P 500 itself is at a major resistance level on a technical basis. So we're going to get into all of these things in a little bit more detail and take a look at the option activity from institutional investors on Tesla stock, guys. So if you like to make money, if you want 2023 to be a good year, if you like Tesla stock, any one of those things or all three of those things, hit that like button and subscribe to the channel, baby. Let's get straight into it. So like I said, Tesla is down about 2.24% at the time of recording this video, still in this bottoming process, and you're still seeing very elevated volume, and we'll come back to the technicals in just a minute. But I do want to start off with the news that is coming from Tesla here today that I don't think is necessarily a bad thing considering what we have seen already in China. And it says Tesla cuts prices in the US and Europe to stoke sales after lackluster year-end deliveries. The key points: the move in the US may help Tesla qualify for more federal EV tax credits and stoke sales volume here and abroad after competition and interest rates increased. In Europe, Tesla cut prices on its Model 3 and Model Y vehicles in Austria, France, Germany, the Netherlands, Norway, Switzerland, and the UK. So you're seeing Tesla cutting prices again in America and in Europe. They have done that in China. So essentially they are cutting prices across the world at this point. And why I think this is a bullish thing is because if they can sell more volume, Tesla has a higher profit margin than other vehicle makers, right? Like 2 to 3 times the profit margins that GM or especially Ford has, or even Toyota, right? They're a profit machine, so they can afford to cut prices, whereas other companies cannot afford to cut prices. Like your Ford and GM, Toyota, they can't afford to be cutting prices on really any of their models. So if things really get bad, they're not going to be able to spur demand by cutting those prices. And I do think you mix that with the EV tax credit and you get a very compelling case for demand in 2023 for Tesla. Even the fact of China reopening and the fact that they cut prices on their vehicles, it's pretty compelling for demand, and you have seen that it looks like those price cuts are feeding into a lot more demand in China. You could see that by the delivery times being upped 1 to 4 weeks, depending on what kind of make and model you're trying to get, what color, what tire size, all that good stuff. So I do think this is a net benefit when you're thinking about the growth that this will cause for Tesla. Sure, they're going to make a little bit less on each vehicle, but they can afford to do that compared to other automakers, guys. So that's the big news here today with Tesla. This came out at about 3 o'clock in the morning last night, pretty much when Europe, daytime Europe, this came out. And the markets, they're not really taking it as a huge negative thing, but they're not really seeing it as a positive at the same time. The stock is down about 2%. We also have had external factors playing a role on Tesla here today and really on the broad markets. If you take a look at just CNBC, the main screen, let's go ahead and pull up some of the bank quotes that we're seeing. JP Morgan tops estimates for fourth quarter revenue, but says mild recession is now central case. And each bank is a little bit different on where they kind of target, right? Like Bank of America, they have a lot of deposits from consumers. So they're doing all right when the Fed puts interest rates close to 5%. But something like Citi, well, their fourth quarter profit declines by 21% as banks sets aside more money for credit losses, and you really seen that across the board. They're setting aside more money for credit losses. Every single bank did this, so it made the earnings look a little bit worse, but overall banks are doing pretty decent here today, especially Wells Fargo and Bank of America. They're doing okay. So banks were not a total flop, but it did not help the markets. They are not saying things that the overall investor wants to hear, like recession, like credit losses, profits declining. That was kind of the theme of these bank earnings, but again, they could have been worse. So those are really the big things that are happening right now. Bank of America, again, expects mild recession and is preparing for the worst. And those are the two powerhouses, right? Bank of America, JP Morgan, that's what I said. And they're both basically saying the same thing. Both putting up money for credit losses, and they're both expecting a mild recession. And if the banks are saying that, well, the equity market should translate that into that's the most likely case, most likely outcome. They're not doing that. Even though the S&P is down 0.10% today, it's not pricing in a recession right now. The earnings, the multiple, it's still sky high. We're expecting right now in 2023, as far as how the markets are pricing earnings, we're expecting another year of record S&P 500 earnings. I don't think that is going to happen. And that's essentially the bet that you're making at this point. One, is the Fed going to cut rates halfway through the year? And are we going to get record profits? If both of those things happen, well, maybe you could justify the valuation of the S&P right now. If one or none of those things happen, then yeah, we're in for new lows in the markets eventually, guys. We might have to see how Apple, Google, Amazon, all those tech companies fare, and it might not be this quarter, it might be next quarter, but things are not looking so good as of right now. I will say Tesla has already fallen so much that a lot of the pain, I think, is already done. You're back to September 2020 levels, and Tesla has grown a lot since then, has essentially turned a profit since then. Totally different business from then until now. So there is that information. As far as the technicals on Tesla, the RSI is at 38.15, which is under the neutral level of 50, so still technically on the oversold side, but the MACD is a little bit in bullish territory, a little bit not seeing that many inflows actually heading into the stock. And we'll obviously want to see how this information does divulge by the end of the day. If the markets do go through a tantrum, right, it is Friday, you are heading into a longer weekend, the markets are not open for trading on Monday, then you might see that end of the day sell off, and all of this information could be different as far as technicals and prices for these stocks. Now, you are still seeing pretty much record volume today, and you've been at that level for the weeks now, guys, in between 150 to 250 million shares that are trading hands consistently, and you're already at 135 million shares trading hands, and it is 1:40 p.m. Eastern Standard Time, so it's going to be another huge volume day. And if we take a look at the S&P 500, you're really hitting this resistance level on this descending line of resistance, where you're basically connecting the peaks of these rallies. Right here, the peak of the markets, 1, 2, 3, 4, 5. Now you're on the 6th technical peak, and every time this has happened, you have got rejected from this level. So I do think it's going to be very hard to sustain a rally above this, and you're really going to need technology to have good earnings to get a rally above that. If you can rally above this line right here, then we might not hit new lows in the markets. That would be a total change in trend, because technically right now you are above the 200-day moving average, and that is at $394.09. The S&P is at 397.10. So depending what happens over the next couple of days, and really the next week or two, as we get to these tech earnings, that's going to be huge. Next week you're going to have Tesla, and I believe you're going to have Netflix earnings as well. Let's go ahead and pull this up. go to Earnings Whispers. This is a great tool you guys can use as well. Earning Whispers, they kind of put everything out there for you guys. You don't have to search individual companies to find out who's reporting on what day. It's really a great tool to use. Now, I might have to scroll down a little bit. I was not prepared. So for next week, you're going to have UWM-C, and it says Monday. I don't believe we're open for trading on Monday, though. We'll have to double check that one. Tuesday, you have Goldman Sachs, Morgan Stanley, Interactive Brokers, some smaller banks, but that's really it. Charles Schwab on Wednesday, Discovery, PNC, Alcoa. That's really the main story there. And then you're going to have Netflix, P&G, PPG, and some smaller banks as well on Thursday. That is January 19th. And then more banks, really all financials on Friday. SLB, Ericsson, Ally, Huntington, Regions, State Street. So lots of banks next week as well. And then you get into more technology that following week with Tesla and Verizon. And then over the next subsequent following weeks, I believe Apple reports earnings on February 2nd. And this is not updated. So Apple should be sitting right about here. But after really 2 to 3 weeks from now is when you're going to get most of the technology companies that will report earnings. And that's what is going to dictate how the markets trade from here. That is it. That is it. That's all that's going to matter. Now, as far as the option activity on the day for Tesla, 451 orders totaling $103.27 million, positive order value of 49%. So pretty neutral overall as far as options are concerned with Tesla. And also, I should mention, the Michigan Consumer Sentiment Survey did come out very good today. Like across the board, things are pretty good. The only thing that was really negative is the 5 to 10 year inflation expectations did actually go up. But other than that, it was pretty good. And the markets actually took a big green candle off of that. And you can see that index was expected to come out at 60.5 and it came out at 64.6. So much better than economists' expectations, guys. So that is going to be it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your weekend, and I will see you in the next one.